You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.
Look, I'm tired of the negativity vortex around home building. Tired of clicky subject lines that frame every quarter as urgent, tapping the brakes, or is this another recession, gloom, doom? We're not driving with both feet. A pause is not the same as slamming on the brakes. And if you only read headlines, you miss the operations that actually prints in the outcomes. Today, I'm gonna say the quiet part out loud about Lennar, analysts, and the big builders are bad myths that we all need to hear. Welcome back to The Builder's Mindset, where we ignore the armchair hot takes and focus on the systems, products, and discipline that win. I'm Mike DiGiovanni, 20 plus year inside the machine, from purchasing to operations, product development, now helping builders and trade partners get profitable without losing the big picture. Today, I want to talk about why the narrative around Lennar's latest call is mostly wrong, why pause does not equal pump the brakes, and a practical scorecard for the next quarter so that you can watch what you should be watching rather than worrying about what you shouldn't be worrying about. So let's talk a little bit about headlines versus operations to start. Here's what sparked this episode. I commented on a LinkedIn thread reacting to a negative Lennar headline. My comment pointed out that even though they had declining SG&A and solid or stabilized or improving net margins and 4.7 sales per community per month last quarter, my comment blew up. I forget how many people looked at it and watched it and how much back and forth there was. This wasn't even a post. This was a comment I put. And why did it blow up? Because people, in my opinion, are starving for analysis that goes beyond, are you changing strategy? And I forget exactly what the headline of the article was, but it did definitely focus on the negative stuff. And I get it. Negativity sells. But we got to stop this, whether it's politics or religion or business or whatever. Let's start really looking at the fundamentals and from the headlines. We've talked about this. We did an episode months back where the title of the article from CNBC was negative, but when you read the article, there was a lot of positive in it, more than there was negative. And it's sad to say that most people don't read the negative. So here's what we do at the Builder's Mindset, and it's why we talk about mindset. We want people to be in an amazing mindset. We want them to go to work every day thinking about, how do I get through this? How can I move through this? And we don't want them to do it through rose-colored glasses, but we also don't want them to do it through, the sky is falling. You know what I'm saying? And so what we want to try to focus on is, how about this? Why not lead with the good stuff and then talk about the cautionary piece, Cautiously optimistic. How about optimistically cautious? Okay, let's start there. So here's the pattern that I see. Literally, most earnings calls for builders go this way. They last about an hour. The first 20 to 30 minutes, usually 30, is their presentation. And then the second half of the presentation, or the call, the second half hour, is the analysts get to ask their questions. And for the Lennar call, I kid you not, the first almost 15 minutes, half of their time, the analyst Q&A, they kept, at least 3 of them, I think, said, is this a strategy shift? Is this a strategy shift? Is this a strategy shift? And so they were trying to get them to flinch. That's why last week's episode was called that. Did they flinch? No, they did not. Look at the fundamentals. Industry newsletters run with things like tapping the brakes and urgent. And I think taking a pause to let the market get a breath and catch up is a little bit different than tapping the brakes. Even though tapping the brakes isn't slamming on the brakes, it's still different than, hey, we're gonna coast for a little bit here. So, and social comments then devolved into big builders only care about the stock price. Meanwhile, in the actual operations, cost structure is being tuned out, SG&A is leveraged, a appointment to sales systems are getting sharper, which I thought that was a really interesting point that they were focusing on, that they're getting much better about scheduling actual appointments, which that's a leading indicator that I think is great for the industry. And core product is being standardized to take waste out. None of this fits in a scare headline, but it's what determines the P&L. And so it doesn't work for the click, but it does work for the cash. I mean, and if you look at the cash long term, are their numbers lower than they were 2 years ago? Yes, but at some point in time, we've got to get over this like heroin-like addict that we've become with the COVID world of things. You know, we're all worried about inflation now, but nobody was really worried and scared about inflation when interest rates were 2.5% to 3%. And every time we turned around, we were getting a price increase because we didn't care then. But the minute like it's a problem, then we care about it. It's going to be the end of the world, you know? And so, you know, let's dig a little bit deeper into Lennar and what the actual data says, as opposed to everybody's freaking out. So they said pause, not brakes, taking your foot off the gas to breathe, which is what they talked about. He described a marathon and like catching up and like rehydrating, refueling. And re-aim is not the same as stomping the pedal. They're not pulling themselves out of the race. They're not DNFing, do not finish, for those of you who aren't like, you know, race, you know, connoisseurs or whatnot. But it's a disciplined pause while they refine their mix, they work on incentives, and cost is operationally maturing to the market. It's not panic, okay? So sales pace, last quarter, 4.7 sales per community per month. That is phenomenal. Yes, I get that it's a lower margin, but they are still moving product. This goes back to what we talk about. If they moderate it to 4, it still proves inherent demand is there, and they're adjusting their business to figure out how to, as Stuart Miller has been saying for the last at least three earnings calls, how do we work on every aspect of the cost structure to get demand more actionable and get margins up, okay? Still, even if they moderate to 4, that's healthy. It's a controllable pace. And given the rate of volatility and seasonal patterns, it is really, really good. So let's see what they come up with. And now let's talk about margin and SG&A. Yes, gross margin pressure happens, but pairing it with declining SG&A and ultimately improving net margin trajectory, it's textbook for navigating a market like we're in. They're simplifying their product, they're controlling their overhead, and they're keeping the flywheel turning. They've always talked about that they believe it makes more sense to take the margin hit, keep the volume, so when things get adjusted, things get settled, they figure things out, they don't have to then rework the whole machine. And they are far from, there are plenty of builders who are in the 2-something sales a month, and there are plenty in the 3s. So it's not like it's the end of the world. Leading indicator most people missed. They called out improved buyer appointments. There is inherent demand in the system. We have been talking about this since the softening began. And if they can get more appointments made, that is a leading indicator, you know, from a pages out of 40x, in my opinion, that just speaks volumes to their overall strategy. Getting people in on appointments with their sales program system, where they have that, you know, I think in almost all their markets now, their sales teams can sell at any community. So it's a lot of it has to be driven by appointment. They're tuning, fine-tuning, retuning their system to improve buyer appointments. That's a great front-end leading indicator. Appointments are upstream of contracts. Improve that funnel and the pace will follow. All right, discipline under pressure. The stock sold off hard post-print. Market cap shed billions, something to the tune of over $3 billion in about 48 hours. Their stock was down like 10%, but the strategy didn't change. That's what discipline looks like. So and we'll get into big builder is not a bag builder in a second, but that's not somebody who just cares about the stock price in the quarter by quarter basis, maybe in the long term, but not quarter by quarter. That is long view validation. Smart, long view capital has recently put real dollars to work in the space. Buffett, $800 million in Lennar, $200 million in Horton, and another $850 in Nucor Steel, an American steel company. There is a economic and financial revival that is coming behind all of this right now. that just give it a couple of years and it will be off the charts. People like Buffett don't invest for the short term, and they also don't invest in companies that they don't think has a long-term plan and strategy to make a good return on their investment. That doesn't mean every investment Buffett does is a winner, but he typically picks winners. If you want to understand builders, stop asking, are you changing strategy? And start asking, what's your appointment velocity? What's your sales per community run rate? How are you leveraging SG&A while you optimize product cost? What are you doing to optimize product cost? As your average sales pace comes down, and maybe you do moderate your sales pace in general, what are you going to do to keep your overhead in check? Ask those kinds of questions, and you'll get to see some of the real strategic answers and things that builders are doing, the ones that are executing well, to keep the machine moving and above water and heading towards dry land, whatever the tide does. All right, so let's jump into this. Also, what chimed in on this whole back and forth was this big builder equals bad builder. Well, nope, it doesn't. But a common thread said quality will only matter if it ever does. They were basically saying like, when, basically they were just saying big builders don't care about quality, and it will only matter if it ever has to, but they were just saying it doesn't. All big builders, they don't care about quality. They don't care about anything but the stock price. Another person listed a TikTok inspector, roasting production work, and concluded Lennar, Horton, etc. are all bad. So let's start with they don't care about anything but the stock price. Look, let's state the obvious. We've said this before. The job of the board and the CEO works for the board in a sense, and they ultimately all work for the shareholders, right? The shareholders are the owner of the company. Their job is to return value to the shareholders. So if you say that and you're making that statement, then you have to say that about every public company. That is their job, okay? Now, do I sometimes talk about the system that is behind that is not ideal? Yeah, because I do believe analysts and how the market reacts, which it is very Vegas-like, and not from a gambling overall perspective, but reactionary, right? There's a supply and demand aspect to stocks too. If a bunch of people rush in to buy a stock of a particular company, even if their fundamentals haven't changed, it's going to rise. If a bunch of people run out from a stock company, even if their fundamentals technically haven't fallen, it's still going to fall. And so the issue that I have here is that people don't have respect for that. Wall Street drives based on a quarterly cycle every 3 months. They should look at a longer term cycle, but Wall Street ultimately doesn't control the traders. But if some of the big inside investors, this is what's frustrating. Look at Buffett. In this window of time, Buffett puts $800 million into Lennar, $200 into Horton. Where is that when it comes to them losing their market share? Okay. Oh, and by the way, I don't know what Warren Buffett cut that deal for in terms of that $800 million investment, but he put it together before they lost $3 billion in market cap. So I'm sure he's not sitting great on his position. So you can watch his position. I bet he's going to hold on to that position for a long term, and I'll go further to bet he's going to make a lot of money off of that investment. So here's the truth from someone who's been inside both worlds, okay? I've seen, and when I mean both worlds, I mean I've worked for publics, big ones, all the publics are pretty big, and I've worked for privates. I've worked for private production builders. Most of my clients have been, and I've been with builders from their stages of early startup doing 50 homes, let's say, a year, up through privates doing 350, 400 a division. I've worked for public divisions that have done, 300, 400. I've worked for public divisions that have done over 1,000, okay? I've seen terrible craftsmanship from small, high-dollar custom builders, one-off builders, people that would never get picked on. Maybe they'd get picked on by that TikTok inspector, but it would not make his feed. Why? Because if you found builder XYZ who builds 6 homes a year in Louisville, Colorado, and you said, look at this shoddy craftsmanship from this guy building this $1 million home in Louisville, it wouldn't sell. But if you say, hey, look at this is how D.R. Horton, the nation's largest builder, builds homes, and you go find the one community at the worst performing division, which has, let's say, the toughest trade bases and the hardest things to build, and they have maybe the guy who is building that home, who knows what could have happened for the construction manager on that site. It's easy to find that kind of stuff. What I challenge some of those inspectors to do if they're going to report on that is look at the company as a whole. Look, we have lemon laws in California. That's because even the best car manufacturers will have things happen in their factory and they'll run some bad cars off the line. Nobody is perfect, okay? We're not building one-off multi-billion-dollar submarines or F-35 fighters or, Boeing 747s that cost hundreds. Oh, they're not perfect either. So give it a little grace, people. All right. So as a wise friend of mine in the industry once said, quality is not a function of cost. But as I go back to the original point, I've seen terrible craftsmanship from high dollar customs, and I've seen excellent execution from Publix, and I've seen vice versa. Okay. Quality is not a function of cost, and quality is also not a function of the size of the builder. Okay. Because even the largest builders building, like, let's say a Lennar who's got, let's say Lennar in either Denver or Lennar in their Southern California division, their Inland Empire division. I think they do over 2,000 houses a year. They're still going to do their math. They're running five homes a month. So in that year, 60 homes per community per year. You divide that into, let's call it 1,800 a year, but they're doing more than that, or let's say 2,400 a year, which is probably about what they're doing. And you end up with, I want to say you got 40 communities, arguably at any given time. You have 40 construction managers. You think they're all going to be able to build exactly the same with the trade base and how we build things? No, they have standards. They work to those standards, and they work very diligently with the local municipality inspections and their internal inspections and their third-party inspections to build a good quality house. All right? So big builders carry also an outsized share of national supply. Pretending they're all villains ignores the role they play in stabilizing availability and cycle times. The other problem I have with all of this is, like, let's just throw the baby out with the bathwater. Let's just say every big public home builder sucks and that home builders shouldn't be able to be public anymore. So we're going to break them all up and we're going to make them small. And then watch the price of homes. If we didn't have those big home builders driving systems, driving volume in the supply chain, the whole market, we'd have less product to offer to consumers to sell. So prices would go up just because of that supply-demand switch. And then the overall supply chain feeding the building of houses would also struggle from a cost perspective, and that would go up. It would be catastrophic. So rather than pointing the finger, remember that when you point the finger, there's 3 pointing back at you, okay? So really easy to play armchair quarterback from a home building industry, as we've said before. Go to a car manufacturer. They get to build their $70,000 car in a controlled environment where the people don't have to move, they don't get rained on, they don't get snowed on, they don't get weathered on. This is not easy work, and I truly believe that 95+% of the builders, and I mean the builders down to the men and women who run the job sites and the men and women who are actually working as trades, want to do a good job and think they're doing the best that they can. All right, the root of most cost, quality, pain is product development, not squeezing subs, and not all these other bogus reasons. I hear it all the time. You want quality. You know what? Here's the other problem. I'm going to challenge anybody who wants to get on and rail about builders and quality. You know what? Tell me what you define as quality, and I got $100 says your definition of quality is bits and pieces of product and components that just cost more. And some of them will add some value to the overall construction and the envelope of the home, but most of what people think is quality is stuff that really isn't consequential. Look, appliances generally, that industry has struggled, in my opinion, from a quality perspective the last 10 to 15 to 20 years. Now, everybody thinks, oh, well, the builders use, a Whirlpool or a KitchenAid or a Frigidaire, and those are cheap products and they're not built to last. You know what I say is there are a lot of higher end products too, even that I would say that don't perform really well. I heard somebody once refer to Viking ranges as the Ferrari of ranges. when it works and when it runs great, but it's in the shop a lot. And so what I would say also though is if we, and look, I love Wolf, Sub-Zero, and Cove, American-made products. I think they're great. Can we afford that in an entry-level home? Absolutely not. It would be 5 times the cost of the appliance package. So does that mean that the microwave that we have in most of these entry-level homes that some of these big builders build is probably got a lower, life expectancy than, something from Wolf? Of course it does. Once again, as I said to somebody, look, if your favorite car is a Porsche 911, but your job allows you to afford, a Toyota Camry, you're going to drive a Toyota Camry. And if your job allows you to afford a Kia Sorento, you're going to drive a Kia Sorento. You're going to buy what you can afford. And then within that strata, we're trying to do the best that we can. And I've watched Kia, to be quite honest, I was never a fan of them, but I've watched Kia improve their quality over the last decade. And look at what Toyota is today compared to what it was in the 80s. Come on. Look, design drives 70 to 80% of the build cost. We've talked about this. We talk about it at length. Rework and schedule risk, it all comes from design. If you design a Lexus for a Toyota buyer, you will either blow margin or squeeze someone, okay? So my challenge to builders really is choose better, design to target, align specs to buyer, build a repeatable core product like Lennar is doing. I think they're doing some good things with that. And then, hey, peanut gallery, those who want to criticize all the builders for building cheap stuff, give them a break when they put a Whirlpool refrigerator in a house instead of, a Sub-Zero, because it's a $400,000 house in, Beaumont, California, or Aurora, Colorado, or Kissimmee, Florida, and it's not a $2 million home in, suburban Orlando or, inner city Denver, so like those people who criticize the spec levels of homes, oh, look, they put the cheapest granite in they could. Well, yeah, like why don't you look at the price point of the home and understand that we're not building a Lexus when the neighborhood and the dealership is a Camry. All right, so give it a break. If you want better cost and quality, fix the drawings and the options first. Also a big fan, streamline your option, minimize your options that make the overall building process so much smoother for everyone involved. Then lock the playbook with the trades and enforce it in the field. That's the builder's mindset. That's the way we need to approach things. There is a way to achieve the objective. We just have to stay focused, okay? And what I do, I'm gonna say this, a lot of the peanut gallery who chimes in about this cost stuff, I'm gonna reiterate it again. What they want is they want to walk a D.R. Horton Express home or a Meritage Live Now home or an entry-level Lennar home, and they want it to be spec'd and outfitted like a Toll home, like a Toll finished home with $200,000 in upgrades. Not going to happen, okay? Get real. All right, so let's move on. The scorecard. What to watch in this next quarter. So here at the Builder's Mindset, we're going to start each quarter, as we talked about. Toll and KHAV come 2 months prior to everybody else. So their earnings report, they'll end the end of January, January. They'll end their quarter the end of January, so they'll report in February. KB and Lennar will end the end of February, so they'll report in March. Those 4 will come a month and 2 months behind or ahead of the other 15 public home builders. So we're going to watch them really closely. We're going to start doing podcasts earlier, and we're going to do them for those 2 builders. We'll do one for each of those. And with the community, if you're part of the community, join up. It's free. We don't charge anything. We're going to start sharing out executive summaries of Toll and KHAV shortly after they report, and do the same for Lennar and KB, basically just taking the public information, boiling it down and sharing it with everybody so you can kind of get a forecast of what's coming and what to see. So the scorecard for me, what's to watch with Lennar specifically in their next quarter to see if we're here at the Builder's Mindset are right or if the pundit headlines are right, okay? And once again, I don't think all the pundits were wrong. I think the analysts, I don't like the way the games they play, but I think a lot of the headlines from some of the folks that are quote unquote in the industry, but a lot of the headlines that are written in the industry, a lot of these people have never actually really worked like at a home builder operationally, so they're still kind of an outside view, but they're still very experienced individuals, but they still tend to like put their headlines to what what sells, right? Okay, so let's watch their sales pace per community per month. This is how I'll judge, and use this in your ops meeting. When we always talk about this, benchmark yourself quarter over quarter, month over month, year over year on these targets, and a little bits of the big guys, right? Look at the best performer in the big guys, look at the worst performer in the big guys, see what they're doing, see how you're doing, and are you improving or you're lagging, okay? And look, the most important thing is relative to yourself, right? They say the only person you should be in competition with, the only company you should really be in competition with is who you were last month, last quarter, last year. So watch the quarter over quarter sales pace per month, and watch the year over year. So we look at year over year because the business is relatively cyclical. So we're gonna watch that. But what I wanna see is what is their fourth quarter sales pace per month. I was predicting it'll still be above 4. They were at 5.7 2 quarters ago, 4.7 this most recent reporting quarter, and I predict they're still going to be above 4, not much, maybe 4 exactly or 4.1. But I'm willing to put money down that they are not lower than 3.7, but I still think they're going to hold at 4 or better. All right, look at their net margin and SG&A, both year over year and quarter over quarter. I think these are both good metrics that you can look at both ways. I believe like sales and sales pace and closings are tough to look at quarter over quarter because of the seasonality, but you can, for the big builders in particular, you can have an expectation of consistent margin, okay? And so then the other thing we can also look at that'll help us kind of see where the trend line is looking is if you look at, let's say, Lennar's 2024 Q3 to Q4 transition, and then look at their 2025 Q3 to Q4 transition. What do I mean by that? If Q3 to Q4 in 2024, they dropped, let's say, 50 basis points, and let's say Q3 to Q4 2025, they dropped 20 basis points, I would say that shows a sign of them getting their overall margin a little bit back in check. But I'm looking for them to have found the bottom and to hold the bottom. So quarter over quarter, I'm looking for them to stay steady in both of those numbers. And we also tend to see, I think if you look, I think a lot of SG&A tends to get a little bit easier to maintain or decrease as you go further into the year, start selling more homes and spread some of that front end spend across a little more. Okay, let's look at where, hopefully they talk again about their appointments and contract conversions. So we want to see what they have to say about that. If they're continuing to do well on that leading indicator, we'll be looking forward to seeing that. And then let's look at the backlog quality. What's the mix, the cancellation rate and behavior, and what's the incentive creep? Look at their incentives quarter over quarter, relatively speaking as well too. Once again, if the incentives go up and the margin goes down, if it's planned, I'm not worried about that. Like if it's planned, not overall concerned with that. So what's the health of the pipeline, not just the size? What's the dollar value of it? What's the average price, etc. I'm going to watch the product discipline. We want to look at, this is for you guys out there, what are your standard options? Like you shouldn't really have any truly standard option. When I say standard options, I don't mean options that you put in that you just add to homes. I've got some clients that like to do this. It kind of mucks up your base house cost, in my opinion. When I say standard options, what I mean is from one community to the next, your option program should be the same. You may have different specification levels. Maybe you have an entry level and a move up. Those might have slightly different option programs because the base house is a little different. But from one entry level community to the next, you should have a standard option program. You should be rationalizing your elevations. Are you doing everything you can in your zip code, in your market, within your municipality, with what your buyer wants to not spend too much on the gingerbread and spec creep reversal? You should be pulling your spec levels down a little bit in this market. I just recently read an article about a builder in Texas who's doing a 2-bedroom, 2-bath house. I want to say it was in the 1,300 square foot. No garage. No garage. Why? Because when you give people the choice of home ownership, and I know we can't do, I wish we could do a study of this. Okay, here's the choice. You can have this home, or you can have this home with all of these features, but you're not going to be able to qualify for the mortgage. When people have to make the choice between being able to afford the home or not, or what I just told another client of mine recently, I said, look, if you don't get your cost in check, they might have to buy this house at another community. And then how are they going to feel? They want to live in this community. This community has higher price, higher land values because of its zip code. You don't want to force people to a different community because of your inability to balance your specs to the buyer type, okay? So let's be cautious about that. Every add-on you bless today is tomorrow's blown schedule and cost variance. So keep it in check, keep the product discipline in check. Trade partner health, okay? Schedule reliability. Are you able to demand the best possible price from your trade because your schedule's reliable, the job site is clean and ready when they show up, and they can get in and no dry runs and do their work? Do they have rework tickets? Are you good on the bid process? Do you have good, clean plans that you're giving them? Are you adding stuff after the initial bid event? That's going to hurt you. We've talked about this. Look, you want a good, clean set of plans that is what you're going to build, and not, we're going in with, they're not even ready to submit to the city, but we're going to go after budgets. Oh, we got to get sales price going. So we get a contract, and then all of a sudden you have 30 changes, and we got to go back to the trade that we already contracted. If you hire a contractor, and they're under contract for a community, and then you come back with like 10 changes, do you think you're going to get the best price for those 10 changes? They're a captive audience. You're a captive audience already. They're not going to give you the best price. If you do that before the bid stage and they know they're competing with 2 other bidders, they're going to give you their best price, okay? So that's, what we say. If you're saving through squeeze instead of design, it'll show up fast. All right, so look, let's talk about a practical playbook for your team this week. Pull last 4 quarters of sales per community and annotate every incentive program change next to the trend line. If the pace didn't move when you move that incentives in a larger direction, stop paying for what doesn't convert, okay? Look at those conversions. If your incentives go from 7% to 10%, but your sales don't improve, why? Pull it back, pull it back. If they do go up, then make a strategic decision if that makes sense for the business. Okay, run a design to target review on your top 3 plans. Remove 1 non-value adding feature or option per plan, per department that causes either the most field variation or the most cost. Why do I say per department? Because I want everybody in this game. I want the sales team to look at plans and go, we could do without this. I want the purchasing team, they're always going to do it. They're scrambling to get the cost targets they want. Go to your construction team. What can we eliminate that won't cause a problem? Let everybody get in the game. Do some cost savings. We talked about do some incentive programs with your team, some bonus structures. Incentivize your team to go find the waste in the plans. Get rid of it. If you're selling a plan right now and you're selling it for $500,000 and you scour and scrub that plan and you come up with, even if you only come up with $1,000 to take off of the cost of that plan, that you're like, nobody cares about this, that's $1,000 extra to the bottom line, all right? That's the beautiful thing about purchasing in any industry. If you lower your cost, it's right to the bottom line. And the equivalent to make that $1,000 in terms of selling another home, to make incremental, it's a lot harder to make that up on the back end with sales than it is to make it up on the cost on the front end. So, all right, once you lock your trades in, sit down with your top 5 and hand them a 1-page core product spec. The baseline you don't deviate from without approval. And I think most builders should go deeper than this. Are your specs and scopes clear at bid, or are you kind of just winging it as you go? Most costs and schedule blowups comes from all these little one-offs here or there. Trades making their own decisions on what they're going to do, what they're going to include, what products they're going to offer, what level they're going to offer. Is it the Cadillac? Is it the Camry? Is it the Yugo? Keep it simple, and look, maybe incentivize them for beating schedules. Cycle time saves money. Maybe you get them on board with incentivizing them to help you reduce your cycle time. And reducing rework, not just being the cheapest. Get trades who are not just the cheapest, but are going to be the best total cost. You want them to help you in the design phase, help you in the build phase, help you reduce your schedule, show you where the complexity is that we don't even see, okay? Watch your appointments every day. Just like you check your job site schedule each morning, keep a simple tally of how many buyer appointments were booked, how many actually showed up, and how many moved forward. If you see that number sliding for a week straight, Don't jump to throwing out bigger incentives. That's like blaming the foundation when the signage wasn't even clear out front, okay? Fix the traffic first, make sure that's good, and the message first. Make sure people are still walking through the door before you start cutting into your margin. Make sure you're really working with your sales team to maximize your traffic and then to maximize what you're getting out of that traffic, all right? So look, the market will do what the market does, and headlines will headline. Our job is to build a system that works in any weather, any storm. Pauses are part of the race. You got to pace yourself from time to time. When you run an ultramarathon, there are aid stations you will stop at, okay? If you're disciplined on product, you're disciplined on appointments and how you set them, you're disciplined on your starts pace, you're disciplined on your overhead there by your SG&A, you don't need a clickbait narrative, and you can ignore it and just focus on your fundamentals. You need a scorecard. And what I say to people is, don't build a huge scorecard that's too much. Analyze your business, look at where you know you're struggling, okay? I was just talking on a fitness call I was at the other day, and my fitness coach, Jimmy Queen, great guy, he made a great point. He said, listen, if you're gonna expand your horizons, stop just going back to the things that you're really good at from a focusing on pointing to those as the pat on the back. Look to those things that you know you need improvement on and then focus on improving them. That's how you're gonna move the needle. Look, if you remove the weakest link, the chain just got a whole lot stronger, okay? If you remove the second weakest link, the chain is just as weak as it was, all right? Make sense? All right, so, if this resonated, please share it with an operator or a builder friend of yours or somebody in this industry who's either drowning in negativity or needs help with a strategy and a pathway to getting an action list and a plan to improving their margins and getting their margins back on track. If you're a builder or a trade partner who wants help simplifying product, protecting margin the right way through design, not squeeze, reach out. We're here to help. We believe in this industry. We love this industry. We live for the industry. We want to help it grow, and we want to help it grow healthily. We want to help it stay strong and get stronger. Make home building great again. That's the work we do here every day. Thanks for listening to The Builder's Mindset. Once again, I'm Mike DiGiovanni, and let's get back to building, getting back to basics, blocking, and tackling. Have an amazing day.
You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.